George Kachuk, with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, here we are, winding down the week. We have Christmas this week, and let's take a look what's going on in the equity markets. Okay, last week we talked about how the equity markets were sending us some mixed signals. I think those signals got pretty much, the market showed us pretty much which way it really wants to go. After the Fed announced its beginning of tapering, the market exploded to the upside on huge volume on Wednesday. Digested some of those gains on Thursday, and on Friday again volume swelled. It was due to options expiration and of course some index rebalancing. However, the volume was huge and the indexes all moved into new highs. We saw new highs on the Dow, the S&P 500, and the NASDAQ. Furthermore, these new highs were confirmed with financial stocks were also hitting new highs. If you look at the XLF, that's doing very well. You also saw the industrial sector, XLI, moving into new highs, the consumer discretionary moving into new highs, and the XLV, the healthcare sector, just below its highs. And also what was encouraging too, we had other really good economic data last week. Housing starts at a 5-year high, and if you look at the home builder index, the XHB, that's also moving off its low. So we have a lot of confirmation this market's moving forward. Again, good economic data came in GDP, came in over 4%. Much better, that was the final report for third quarter, that was much better than expected. And the big number in here was corporate profits annualized at 7.7%. So if you recall, headline news kept telling us how taper is going to kill the market, going to kill the economy and so forth. Nothing to do with it. Markets are moving up because corporate profits are increasing. Taper is a good thing. It had to end sometime, and I'm glad the Fed's doing it. And also, Fed doesn't really flip-flop back and forth on policy. Once it starts moving one way, it tends to trend for a while. So expect more vapor to go. Rates will probably stay low for a while. Okay, so one of the plays we're looking at here in this market, it's a stock we've owned, the stock that I've talked about a few times, is Valeant Pharmaceuticals. That symbol is VRX. The reason I like it, it's been consolidating since about early October, moving sideways, straddling its 50-day moving average, which is about 109. And last week, it was able to retake this 50-day line on big volume on a number of days, showing us that the stock's being seriously accumulated. It's trading at about 112. So if you're going to play this stock, you can use that 109 if you're a short-term trader as a stop, or really you need to probably give it a little more room down to the 105 level, because that's really what has some really good support. Valeant keeps growing through acquisitions. In August, it acquired Bausch & Lomb, which gave it entrance into the eye market. Last week we learned that it acquired Solta Medical, and they make dermatology creams. So again, it's just expanding its portfolio through growth. Last quarter sales came in at 75%, and for this quarter, analysts are expecting an earnings growth of 69%. So if you're interested in an interesting play, Valeant, we do own it. We are accumulating it at these levels. That's something you should take a look at. But as always, let price and volume be your guide. While we're in this uptrend in this market, there's still some selling pressure from a few weeks ago, but it looks like the market's taking that out. But don't get too complacent. Just let price and volume be your guide. Watch your stocks, watch the indexes. And I'd like to wish everybody a Merry Christmas and Happy Holidays and a Happy New Year if I don't see you until then. So as always, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Merry Christmas, Happy Holidays.